presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. Hey, John, what's going on, brother?
Hey, Tom, good afternoon to you. How are you?
I'm doing great, man.
I want to thank you, first of all, before I ask you about the stock. You and Tim Ward and all the gang at TFNN. I had a really, really good year after the October call you guys made. My 401k is up 72%.
Congratulations, man.
A couple of things I made with Coinbase and other stocks that I made, and I've had a good year.
And we appreciate you growling and prowling with us, man. That's a beautiful thing.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shoup, filling in for Tom O'Brien. I'm going to round out the week with you guys. I hope you all had a good day. Quite an interesting move in the market. Obviously, a massive counter-trend bounce in the dollar, up about 0.6% right now, trading at 102.51.
The Tom O'Brien Show is produced.
Very interesting kind of divergence we're getting in a sense, right? So usually when you have the DXY really moving up pretty heavily, you're going to get at least some depression in the general equities as well as some of the metals. Obviously, we're off a little bit in the gold right now, off about 0.54%. The composite, we're up 0.9%. Dow Jones Industrial up 0.5%. That E-mini is up 0.6 as it stands currently. And then the SPY doing about the same, about 0.6, trading at 571. Wow. And so that makes me a little nervous in some capacity, right? Like, are we just getting kind of an end of the week kind of pump? You know, if you listened to the interviews that I had with Tim Ward this week, and he is a great kind of caller on what happens in the markets, he's looking at kind of a sideways movement. And just based on this high movement of the dollar and kind of a divergence with what the equities are doing, with what the indices are doing, I kind of feel like this isn't maybe going to carry over into next week, right? The data is weird too. The dollar's obviously coming up. You had honestly pretty strong services activity expanding. Payroll expands pretty immensely. If I can get the exact numbers for you. I mean, give me a second if I can get this up here. Yeah, September U.S. job reports, 254,000 rise in payroll. And that is extremely high considering what people were expecting, right? So the unemployment rate ticked down to 4.1% in September from 4.2%. Economists had forecast the economy would add only 140,000 jobs versus the 254,000 that was added, which would have been a little change from the originally reported increase in August. So then the kind of review on all of this is people are saying, well, yeah, of course the market's going a lot stronger, right? You get this kind of stability and it increases this likelihood of a soft landing. But I don't know if it necessarily does, right? You have this insane basis, point cut of 0.5, right? Or excuse me, 50 basis points on some fear that the job market was going to kind of disintegrate a little bit. And then it comes back and it's way stronger. I mean, we still exist in something where inflation might not be totally done. And then you enter into a really sketchy situation where you've cut things by 50 basis points and you kind of just had, maybe 2 months of decent numbers where the Fed said, hey, maybe we can start cutting here, or they were concerned a little bit about the jobs. I mean, that is extraordinarily strong, right? I think, you can say that there's some stability coming in, right? At least people know now what's going on in the sense that the Fed's not going to cut rates as quickly as maybe was anticipated. You can kind of anticipate, say, maybe you're not going to get another 50 basis points. I don't see why you would by the end of the year, unless obviously some really, really bad data came out. Kind of the downside are suggesting that you could get some pretty strong, basically strong recessionary pressures, right? Which you're not seeing at all. I still think the biggest fear we have in this market is that things rally up way more than I think the Fed anticipates. And so it remains to be seen what's going on. But I think this upward movement is kind of just like, hey, job data is great. We were afraid that it wasn't going to be very good, and that obviously is recessionary in some concept. And of course, as we spoke about sometimes prior, it's it's a lot harder to get job numbers back up once you've annihilated them through really tight financial policy or fiscal policy. So remains to be seen what happens, but I know someone in the den was like, it's kind of hard to stay, long over the weekend, and I kind of agree with that. I don't see necessarily this as a phenomenal thing on the long term, because I think we still deal with some of these inflationary pressures. So it remains to be seen. But you're looking at the services activity that expanded the fastest pace since early 2023. I mean, this is still a hot economy. U.S. service providers expanded in September at the fastest pace since 2023 in February, driven by a flurry of orders and stronger business activity. The ISM index of services advanced 3.4 to about 54.9 last month. Readings above 50 indicate expansion. Of course, we're talking about that with manufacturers. They're a little bit below that, I think around 47, but we'll talk about that in a moment. And the latest figure exceeded all projections in the Bloomberg survey of economists. The group's new orders gauge jumped from 6.4 points, the most since the start of 2023, combined with a 4-month high in a measure of business activity, which parallels the ISM's factory output gauge. The data suggests the economy was on solid footing at the end of the third quarter. Pickup in demand growth also helped to fuel an acceleration in prices paid for materials and services. The index of costs paid rose to 59.4. At the same time, there are more signs that companies are pulling back on hiring. The ISM gauge of services employment fell to 48.1 from 50.2. Again, some kind of voodoo stuff, I think, that's happening. You got a lot of different conflicting pieces of data here. The manufacturing is a weak spot in the strong U.S. jobs data. The U.S. has lost 34,000 manufacturing jobs in the past 2 months. That's according to the BLS. Employment now stands at 2-year low in a sector that has been struggling from weak demand, high interest rates, and uncertainty about the presidential election that has hindered capital spending. I don't blame them. And manufacturers, they shed 7,000 jobs in September. They represent a fraction of the total non-farm payroll, about 8% today, compared with almost a third in the 1950. People say some of the numbers might be bottoming out, but whatever. That's where we're standing. Let's see what else we have going on. Crude oil really getting pretty strong up here, up about 1.23% again, trading at 74.61. Of course, the Brent crude is up at 78.23. And again, this is kind of, I guess apparently what happened is there was some information that the U.S. and the Israelis were actively observing some of the oil outflow in Iran, and the Iranians moved some of their tankers away and tried to hide them. That becomes a significant issue for Iran. I remember, well, I don't remember because I wasn't alive, but a few decades ago, the Iranians and the Americans were arguing about something, and it went somewhat hot, where they ended up blowing up, the Americans ended up blowing up some of the infrastructure that Iran had, right? It's very exposed. And so if there's any target you want to hit that doesn't have a lot of human casualties but really hurts people, it's going to be that infrastructure that Iran has on its coastline, and there's not much they can really do about it. And this runs into some issues, at least with global supply and then prices going up. Folks, we'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, everyone. Jacob Shoup filling in for Tom O'Brien. This is the Tom O'Brien Show. Taking a look at Rivian right now. Not being treated very well, off about 4.45% as it stands currently. Rivian shares drop after EV maker slashes production targets. Which is not what you want to hear if you're trying to get in to a stock like this. I mean, one of the things that I was hoping on is you could get to, they've had some pretty good motion towards profitability, right? There's this idea that if they can get things rolling by the end of, Q4 here, beginning of Q1 25, you can start making some pretty decent profit, or at least Rivian can, right? And this would be very positive. I mean, they have fantastic stuff in the sense that the carriages they're making and the tech that they use and the utilization of AI, it can just be, these are fundamental building blocks that they can build whatever they want on top of it, which is very interesting, this kind of modular approach almost to making vehicles. And they've had a lot of setbacks. This, of course, I think is a massive one, and it starts putting in, kind of the question, for me at least, when you can actually achieve profitability on this. So we'll take a look at this. The company is now expecting production to drop by as much as 18% this year due to an ongoing shortage of a component used to make its electric pickups, sport utility vehicles, and commercial vans. Third quarter output and deliveries both came up short of analyst estimates. They don't really mention what this is, and I try to look around for it as well. But this was an issue that they had with Amazon too, earlier in maybe like a month or two ago, right? I think this was in August potentially. They were able to resolve that. But I mean, if you're getting, one of the bright spots that Rivian has is, these vans that they're producing for Amazon. I mean, that's a huge account to get, right? And they recently announced as well that they can sell those vans to other companies as well. They're not just limited to Amazon, which again is, broadening kind of their horizons. But if you're getting to these points where, the components you're using, you're not able to secure those for some long, period of time, like that is a major issue for a company that needs to create consumer goods. So I think this is kind of a bad thing, especially if you're, buying around like I was. And I still think maybe on the long term, Rivian has the potential, but things like this start making me question it a little bit more critically than I had prior. So we'll take a look at this right now. It says it now expects to make 47,000 to 49,000 EVs this year and that is down from an earlier projection of 57,000. That's, 10,000 units is pretty intense, right? The company still expects to increase annual deliveries by a low single-digit percentage. The production stumble could delay Rivian's goal of achieving positive gross profits by the fourth quarter. Gross margins are now expected to be negative 10% in the final 3 months of 2024. Additionally to Scaringe, who's their CEO, has just been selling a lot, which is never helpful, right? There's now some conversation that they might do one last issuance of new stock, which is going to be a huge problem if they do that. Because in my opinion, you just reset the time of people getting in, right? Forming that kind of investor base and then having it pay off for them. So people definitely, if that occurs and you're already in Rivian, God forbid you're at something like this high here, right? It's going to be a long ride, right? So Scaringe acknowledged last month that the company was contending with a couple of challenging supplier issues and specifically referred to EV motors that Rivian makes internally. The company said Friday that a shortage started facing in the third quarter has become more acute in recent weeks. Rivian delivered 10,018 vehicles during the quarter, and this was its lowest in a year and a half. The company continues to expect 50,500 to 52,000 deliveries this year. So we'll see if they can make up for that in this remaining quarter. But yeah, a little bit rough for them going forward, without a doubt. I think Tesla still probably sits pretty, at least considering some issues in China. If I could just get the thing. Yeah, up about 3.57% right now. Definitely watching closely for their robotaxi release. If that does well, which Elon Musk is very, very good at pumping up this thing, I think you could probably see a momentary pump in the stock until we come down, probably roughly to where we are right now. Okay, let's take a look as well at some other things. It's kind of is in line with Rivian a little bit, but you have VW, okay? And they had their second profit warning. This is a kind of tough issue for them. The German manufacturer on Friday slashed expectations for revenue, profit, and cash flow due to waning demand for its cars. Now, keep in mind, a lot of the hype with Rivian is that huge amount of money that they're getting from VW. Now, keep in mind, that's not all cash, right? That's going to be like convertibles, stuff in equity that they can exercise as well. And it becomes an issue if Volkswagen gets so domed out, essentially, by the Chinese, which is why you see the EU doing this massive tariff that they just passed today. It was, I suppose, a little bit controversial among some of the legislators over there, but it needs to be done, I would say, from their perspective. That's not really like an objective take, but if I were a European legislator, that is something I would be extremely concerned with, is essentially the Chinese. So the German manufacturer on Friday slashed expectations for revenue, profit, and cash flow due to waning demand for its cars. The company now expects to deliver fewer vehicles this year than in 2023, its fourth annual sales slump in 5 years. The warning underscores the extent of the crisis at Volkswagen, which has bungled the transition to electric vehicles and lost relevance in China, where its VW, Audi, and Porsche brands are hemorrhaging market share. In Europe, the CEO, Blum, faces new entrants from China's BYD. Of course, we spoke about them a little bit maybe a few days ago, as well as a conflict with unions over possible job cuts and unprecedented plant closures. So VW stock declined as much as 2% in Frankfurt. Yeah, taking this year's drop to 15%. And I mean, how do you compete? I don't know how any company competes except in light of these tariffs, where you just prevent non-Chinese companies from essentially, you basically prevent your citizens from buying Chinese goods. That's the only path they have. But then you run into greater issues as well, and I think this is happening with the cognac producers, where they're like, hey, we're going to get targeted as well if you start doing this. And this is why tariff wars can get so nasty and kind of weird. I don't know how you, as an economic zone of the EU, compete with super cheap labor, less regulation, right, that you get from China. Tesla has the benefit of just being kind of an attractive, more luxury option over there. But a vast amount of the people are going to be buying NIO, and I promise you, as Americans, we are going to be buying those things as well, because things are so unbelievably expensive, and they're going to continue to get more expensive. Even if they do it, I was reading this one study, is like if you even introduce a 100% tariff on Chinese goods, they can still at some point be cost competitive with American-made products. So that runs into some big issues for Volkswagen. I think we're going to see a pretty good, Q4 for these Chinese companies, especially getting this kind of bolstering capital inflow, or at least the promise of it, from the Communist Party itself. So we'll see what happens with it. What else did I want to talk about? Ubisoft. What time do we have left until the break? I'll talk about Ubisoft when we get back, because this journey is unreal of what's going on with this stock. But you want to talk about, again, another Chinese takeover. It's going to be this. So folks, stay right there. We'll be right back. We're going to talk about Ubisoft, how they failed immensely over the past few years, even cratering more so recently, and then why it's up today. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everyone. This is Jacob Shoup filling in for Tom O'Brien. This is the Tom O'Brien Show. Before we went to the break, I promised we were going to speak about Ubisoft and kind of what's going on with them. So as you can see here, let me even bring it back even further. These are the American shares on it, at least from like May 16th, you're up at 525, all the way back down to 2. This stock has had some significant problems over the past few years. You can see it with the high on, at least on these kind of shares here, 24.55, and we're trading right now at 2.99, actually up about 30% today. So what happened? So I was born in 1996, right? Growing up, I'm 5 years old in 2001, kind of growing up on this forefront of the digitalization age. You know what I mean? There's still people in my age group are a little bit older who, maybe were much more like playing outside kind of people. But when I was young, I grew up and all my friends, we played video games, right? And Ubisoft was a massive developer of some of the most well-known games. Like if I heard, like we have Far Cry, big one, okay? You have Assassin's Creed, one of the biggest IPOs. They have Tom Clancy, right, with Rainbow Six Siege. These are games that have made a ton of money, and they are, emblazoned into the culture of my generation. Like you ask people my age, you know what this game is? People will say yes, absolutely. And video games really kind of took off in a major way around that time, right? Because tech just got a little bit better. Ubisoft again was at the forefront of that. And what has happened is over time, and it started off with basically microtransactions, right? Some of these games, they would have it, these are like indie games or games coming from China or Korea in particular, where you could, this happened on mobile phones as well, where you could buy goods with real money in the game. This was really eschewed by a lot of American players because they wanted to be separate from their real life and play these kind of games. And so the industry's kind of figured out, especially through things like FIFA, right, which is a massive video game, makes billions of dollars, that people will actually tolerate it if you slide it in slow enough, right? And this is essentially what happened with Ubisoft. So when you get this corporatization of kind of art or entertainment, which you've been seeing all over in the culture, even like in movies and stuff like that, you can end up drawing the life out of it and becoming a little bit kind of out of touch with what your consumers want. And nowhere is this problem more acute than in the video game industry, right? And I mean, the video game industry, again, billions of dollars. And the amount of cash flow that can be generated, not just for one-time sales, but the way that people purchase things in-game, I mean, it's crazy, right? And so Ubisoft has basically, along with a lot of other video game companies, has been corporatized, right? And you get kind of these people who are coming in, board members, who are looking much more of like, how can we take this IP, right, and just milk it for as much as possible and people will still buy it. And they were able to do that for quite a long time, right? It recently has caught up to them. They released Star Wars Outlaws. There's also a lot of political talk from a lot of these different companies that people just didn't like and didn't want to be a part of. And you could see the erosion of the Ubisoft stock because of this. So recently, they released Star Wars Outlaws. One of their C-suite executives, I mean, the corporate speech on it was insane, but basically the point was, is they're just not selling anything. This is like now starting to really hit them. You just saw this again with Sony as well, which lost $250 million on a game called Concord. This is not, big stuff, right? Or excuse me, this is not small stuff. I mean, $250 million to lose on development is massive. And when I mean they lost it, I mean they completely lost all of the money. They're not selling the IP anymore. And you're seeing the same thing to kind of happen with Ubisoft. So essentially they had a new Assassin's Creed game. The people didn't like the characters in the game. It was set in Japan and they didn't think that it made sense of some of the lead characters. And it received a lot of backlash from Americans and Japanese as well. They attempted to try to explain this away of saying there were trolls and eventually paid a bunch of journalists. This was all outed. And so it sank even further. So the news is now, is after all of this, even before this major drop off and this pushback of Assassin's Creed, which was supposed to come out sometime this month, but is now geared for a February 14th release, which is kind of on the nose, I suppose, Valentine's Day for releasing a video game. They completely sold off. And one of their C-suite guys said, if we don't do something different now, we are in serious, serious issues. So there's some story, apparently, is surging to 30%. after Bloomberg reported that major shareholder Tencent and the Guillemot family, its founders were considering a buyout of the company. The family owns 15% of the company, while the Chinese gaming giant Tencent owns just under 10%. Ubisoft stock was down 54% for the year at Thursday's close. Again, because of what I just listed out. This is most likely the best bet for Ubisoft. They still, and Tencent makes good games. I mean, I am suspect sometimes of Chinese software companies. I've talked to you about some of the other games that exist out there, like League of Legends, where they install stuff on the kernel of your computer, like anti-cheats, which I think is, for me at least, a complete no-go. But I guess most people don't necessarily feel the same. But these IPs still stand. And the amount of money that Ubisoft has made in the past when they're making good games can come back again. So this is something that I'm watching pretty closely, because I do believe something like Tencent can come in and actually really do service to these IPs in a way that people want to play them again. And if you don't believe me on, bringing back some integrity to like the game making, we can take a look at Activision Blizzard, right? So let's see what we're trading at least currently. So one of the big things that Activision Blizzard does, of course, is World of Warcraft. They were able to bring WoW back to China, which was massive, and it has really done quite well for them. They're trading at 94.42 right now. I'm not sure, my computer isn't loading. But what happened is you were having some issues with World of Warcraft over the past few years because it got corporatized again, right? They brought back their guy Metzen, and he started rewriting a story, and now there's more players than ever. And the amount of money that people spend on the game is immense. It really is. And now moving back into China, this is huge for this company as well. So keep your eye on Ubisoft. If you know anything about what I was just talking about, then definitely keep your eye on it, because if Tencent gets a hold of it, there's definitely some capacity for Ubisoft to do quite well. All right, that's my video game rant. Taking a look at Meta right now, trading up 193, just right under 600. I mean, this stock has consistently done well. The interview with Mark Zuckerberg that he had with Bloomberg was phenomenal, and he's becoming really a more likable individual, which is quite interesting. I think that's what happens when you do jiu-jitsu, I guess, right? But so trading at 594. So what happened with them is they're challenging OpenAI, and they're announcing a new AI model that can generate video with sound. Quite interesting. We'll go over that a little bit when we get back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everyone. Jacob Shoup filling in for Tom O'Brien, looking at Meta before we went to the break, trading up about 1.95% today at $594. Now, on the long term, I love Meta. There's not much you can not like about the stock, at least from like an investment standpoint. It's going to dominate the kind of VR segment when the young generation gets older. They will use it. They already are using it, and it'll just be more familiar to them. And they're already very dominant in that realm. Additionally, you have this headline of them challenging OpenAI with a new AI model. That's not really exactly what's going on. Now, in some capacity, you can say, yes, it challenges them because they're not going to have to contract OpenAI to use any of their services. But the real thing, and this is what Zuckerberg does all the time, is if there's some kind of new tech that he feels like can benefit his ecosystem, he figures out how to develop it in some capacity, at least in a bare-boned way, just to get it to work for his Instagram or his Facebook. And that's really, I think, going to be the extent of what we see here. Now, of course, don't get me wrong, that is a massive market, right? So the point now is like you want to post something funny on Instagram or Facebook, you don't go to 11 Labs, you don't go to OpenAI to generate something. You can just do it right in Meta. So that's fine. But at least on like some of the other stuff that I see really working with OpenAI, which is general search engines, which is spinning off maybe some of these what I call like sapling AIs that you can just train and it does things personalized to you. Meta is not really doing that. It's kind of interesting though. It's called Movie Gen. It can generate background music, sound effects synced to the content of the videos, etc. I think it's gonna be really cool. I love this kind of stuff, honestly, right? And I get it from the perspective of like, visual artists and even musicians, where these kind of things, one of the big things that's actually coming out is you have, this one guy was found to have created a bunch of music using AI. He uploaded it and then ramped up his monthly listeners, which he was getting paid for. And that was all AI as well. So, you can run into some issues like that. But I think one of the things that's really appealing about this kind of stuff is it lowers the barrier of entry to creation. When I was younger, I always liked to write, I always liked, creating these kind of little worlds or whatever. And I think that if I had this kind of stuff when I was younger, I could have had a lot of fun with it. And it's good for that self-actualization, and no doubt it's going to bring people to interact with those platforms a little bit more. I use Instagram. I do have a Facebook, but I don't like going on there for numerous reasons. But if this gets rolled out, to me at some point, I absolutely will use it just to see what I can do. I think it's healthy for people to be able to engage in that, and I think it's very neat. Let's talk a little bit about Bitcoin. So, give me one moment here. These weird lags on it. Yes, we're under that 65,000 right now, trading at 62,331. It's been like kind of a tough thing with Bitcoin, right? You have this argument, I think, before the halving, where you're going to get demand coming up because you get all these big, traditional investors getting in, opening up ETFs. You're getting some more kind of, TradFin acceptance of this vehicle here, and along with getting a squeeze on supply creation, right? Which in theory is going to, shoot up the price. but they've been having a really bad demand issue. I mean, Bitcoin itself has had. So this is data from Farside and CoinShare. It revealed that the inflows from Bitcoin investment products totaled 436 million over the week ending September 13th, which is not fantastic in any capacity. There's minimal profit and loss taking at the current range. That's another thing too, where you're like telling people, like, hey, just get in and just hold. It's going to go up. Well, then who's going to push the price up, guys? Again, this was the whole argument of it being in some capacity really early on is like a Ponzi scheme, right? Is like you need more people getting in and playing in it. You need that kind of liquidity to make kind of opportunity, which is I think is a big issue. And so it has this massive trading range that is kind of stuck like right in the lower middle portion of it. So it kind of remains to be seen what happens. Of course, you had some issues with XRP where it was labeled not a security a little while ago, and now that got overturned. So there's a lot of issues going on with XRP itself. But if you remember when I first filled in, I think this is one of like the first times I ever filled in for Tom. I was talking about crypto a little bit and what I think is the most interesting utilization for this and how I see it going forward. And I think one of the trajectories you have in this kind of society is, I mean, you have this general kind of attempt to commodify everything, which has its own problems to some certain extent. But it's also this attempt to make things more liquid, right? And be able to move value in easier ways. And that's really what crypto has been thus far, is, and even things with like the pictures, I can't think of the name for them, for goodness sakes. The non-fungible tokens, your NFTs. The idea, these are all just kind of attempts to try to figure out how can you establish value, which is predicated on scarcity, in a realm where there doesn't really have to be any scarcity, right? That was what I found so funny about online real estate, is it was kind of just fake in a lot of ways, right? And maybe it's a little less on the nose with things like crypto and NFTs. But one of the things that I found really interesting about this technology is the ability to essentially, tokenize value. So I have all these shares in, let's just say Meta, that doesn't really do anything for me. I have to exercise that. I have to pay exit taxes on it. I run the risk of it going down. Of course, you still run the risk of it going down if you're going to do what I'm talking about here. But, say I want to make a purchase or something like that, and a lot of my assets are in, let's say, like a stock portfolio. Instead of exercising and paying that tax, it'd be great if I could just transfer that kind of stuff over. And that's where we get into the realm of tokenization of essentially equity, which I find really interesting. And apparently BlackRock is trying to do this as well. So the use of BlackRock, this is from Bloomberg, the use of BlackRock tokens as collateral moves closer to the mainstream. So efforts to allow the use of tokenized shares of money market funds from Wall Street behemoths like BlackRock and Franklin Templeton as collateral in trading took a big step forward as a group of financial firms voted to approve the guidelines of their use. So the recommendations would apply existing policies and procedures to support the use of blockchain for non-cash collateral in a manner consistent with the margin requirements of the CFTC and other regulatory bodies. The full committee is expected to vote on the recommendations later this year. Should the recommendations receive full approval, that could increase the use of tokenization as many businesses want to pledge tokenized collateral to gain capital efficiencies. McKinsey estimates the total tokenized market, including stablecoins, could reach around $2 trillion by 2030. Driven by usage in mutual funds, bonds, exchange-traded notes, loan securitizations, and so on. Another thing that becomes pretty interesting, about this is you can get large private equity groups that really almost start acting like banks in some capacity. I mean, say you have something that's relatively stable, like a money market fund, right? And you create tokens based on that. I mean, you're starting to create new vehicle currencies in a major way that are not fully bound, I would say, by kind of national interests, which is super fascinating. I also like the reality and this kind of concept to say I'm doing business here and I have some partnership in like Manila or something like that. I don't want to have to be paying all these different kind of taxes. You know what I'm saying? I don't want to have to worry about converting in a certain amount. It's easy because the US dollar is, a vehicle currency. Let's just say, for instance, like we're Brazil or Russia or someone in BRICS, right? I mean, instead of having to worry about, yuan stability and everything like that, I mean, using some kind of internalized token that holds a value and can be translated into something of, more, I guess, tangible value, like a dollar or something, is a really attractive option. And I think we're going to see a lot more of that coming online in the next decade. So stay tuned for that. I think it's been interesting. Folks, stay right there. We'll be right back.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everyone. Jacob Shoup filling in for Tom O'Brien. It is getting stormy outside. That means it's the end of the day. Take a look right now at Spirit Airlines at a freaking pretty darn heavy low of 140 here, trading up 167 right now, off about 25% today. Of course, this news was everywhere, but interesting just to bring it up. Obviously, Frontier Group and JetBlue blew up. Basically, Spirit is essentially considering bankruptcy. That's going to shoot up a lot of these other stocks, of course, because you're eliminating competition in some capacity. The Wall Street Journal reported that the carrier is in discussions with bondholders and other creditors about possible terms for Chapter 11, although it noted such a filing would not be imminent. The paper said that Spirit is also looking at restructuring its balance sheet through an out-of-court deal, although the focus was on bankruptcy negotiations. Spirit has faced losses and falling revenue on tougher competition from both low-cost rivals and bigger airlines. It failed in its $6.6 billion plan to merge with Frontier in 2022. Spirit agreed to take over JetBlue, and that fell through. Challenge over antitrust concerns. And they're probably like, what do you want me to do, man? It's like we're not doing well here. We're trying to figure out any way to deliver back. This is 184 million market cap. That is a rough market cap. You know, I wonder if there's an argument to be made here. I'm like, this is so low that any like moderately positive news, like, hey, like maybe we're not gonna go to Chapter 11. We got our stuff resolved, privately. that you just get like some crazy 30% move or something like that, right? Just on some random day. I don't know. That's like kind of the way I'm thinking. It's Friday, so we talk some, you know. The news sent Frontier up 21% into positive territory for the year. JetBlue shares jumped 14% or up more than 30% in 2024. You have Southwest Airlines, Delta, American, and United doing okay, all things considered. Another thing that I think is really interesting, we were speaking about this, is that North Carolina quartz mine. Okay, we were speaking a little bit about spruce pine on that high purity quartz. Damage was minimal. So I don't know what that stands for ferroglobe. I did a DCF on ferroglobe. It was kind of interesting, but now that spruce pine maybe isn't as bad as anticipated, they don't get as much attention, and the chip sector can keep going on. We can keep building this vast AI network. Folks, thank you so much for joining me. I hope you all have a great weekend. We'll see you Monday.